Welcome to the daily update, where I'll go over the action in the market for Friday, August 8th, and we'll see how things look for Monday, August 11th. Before diving into today's video, if you find it helpful, consider a 30-day free trial to the SPX investing program. This trial lets you explore my unique approach to market analysis. Full-length daily and weekly videos are available on a delayed basis after the market closes. For immediate access, become a member by clicking on the link below. Okay, didn't quite set a new all-time high with the S&P. Less than 1%, less than a point, I believe, from the closing high. But the NASDAQ and NASDAQ 100 did. Now, it's mainly the mega caps. Apple was really seeing some nice moves up lately. And we're seeing still these negative divergences within the market. And I'll go through the charts and show you what I'm seeing here. There's still reason for some concern, but we have to go with what price is doing, and it's going up. It went up more than a lot of people, including myself, anticipated for Friday's session. There were no economic reports that came out. There were some geopolitical trade news and things like that that I'll go through. And the market seemed to take that as positive. So we're looking a little bit more on the positive side now. So right at the open, we did have a higher open, but we've been seeing that. Even on Thursday, we had a higher open, but we set the high right at the open. And prices got up to R1 at 63.83, which was just about the high for Thursday. And it looked like, okay, maybe we're going to stall out at this point and turn and go down. Well, we didn't. We just chopped above and below R1. Then as we went throughout the day, we stayed above R1. So the gains that were achieved right after the open, the market was able to hold on to those and actually close above R1. We were up 0.78%, still not more of a percent move. We've only seen a few days like that, but it's a gain and it's helping things improve, at least based on price. But we were below average with volume. Now, again, that's a classic negative divergence. We're going up with the S&P, a drop off in volume. That's still pointing to possible exhaustion to the upside. And we're positive on all three time frames, short, intermediate, and long term. We're above all the moving averages, and so that's positive right there. Interest rates did tick up, but it's not causing too much of a concern, at least right now, with stocks. And there's a lot of different geopolitical and trade ideas and tariff things that, or trade war things and all these that are coming out right now. So some comments. Both the NASDAQ and NASDAQ 100 did set new all-time highs. Now those are growth areas, and they've been doing quite well lately. And then President Trump, his team of advisors, they're adding the names of possible Fed chair nominations. I could read off the names to you, but these are not people that you probably have ever heard of. But he's just putting together his list. And then gold did settle higher. There were some reports that U.S. Customs may begin imposing a 39% tariff. So if you bring in a kilogram or 100-ounce gold bars, there was some fear that there'd be a 39% tariff on those. But then Bloomberg came out later on and said that the White House will issue an executive order clarifying that such gold bars will not be subject to tariffs. So that kind of eased that fear there. Now, the U.S. and Russia, they're trying to negotiate terms for an agreement that would allow Russia to keep some of the territory that it has conquered, I guess you would say, in Ukraine. And because I watched a short little snippet with President Trump, and he's like, I just want the killing to stop. So he's kind of capitulating on that part. He's not really necessarily bringing in the political side of things. It's like, let's just get this over and stop all this bloodshed that's going on. At least that was my takeaway from it. Then there was a summit that's announced between President Trump and Vladimir Putin, and it's scheduled for the upcoming week, but they didn't say where it's going to take place. It's like, okay, we're going to try to bring them together, but it's unsure. It's like, okay, will Zelensky from Ukraine, will he be involved in that? There really wasn't anything said in that regard. And then St. Louis Fed President Alberto Musalem, I think that's how you say his name, who suggested that inflation could remain elevated due to tariffs and indicated that keeping current policy appears appropriate. Then he's a voter, also noted that he remains open-minded, and the market took that as positive because he's been more hawkish, saying, "No, we need to keep interest rates where they're at." Then he kind of came out and said, "Well, I might be open to lowering rates," along with some other folks on the FOMC. Mega caps did have a good day, and that's really where the strength came from. We already have two of our short-term indicators that are looking extreme, but not the whole list. It's not showing an awful lot of conviction. The short-term stochastics, that's the very short-term chart, it's turned back up and is looking extreme, and the Williams percent are. But the others, the Stoch RSI, the CCI charts, those are not on the list. And in the intermediate term, the Sean trend meter is starting to show more of an extreme positive reading, and we're getting far away from the 50-period moving average again. We're not far away from the 20, but we are too far away from the 50. No real changes to the overall Fed scenario. Now, in the upcoming week, we're going to get CPI, PPI, retail sales. It's a pretty heavy week that might give some insight as to what the markets think the Fed will end up doing. The dollar was up, and interest rates were also up, and stocks went up anyway. We're at 4.29% with the 10-year yield as of Friday's close, where we had been at 4.25%. Sentiment is back up to positive. We ticked up from the 55 range. That's the border. If we drop down to 54, that's neutral. Well, now we're coming back up, so that's taking this as a little more positive, coming in at 59. And we're still positive with the trend. The green line's above the red line, but we're still seeing a weakening trend below the moving average. With the update, the bias is positive. I'm still keeping the momentum. That's the last 2, 3, 4, 5 days taken together. I'm keeping that at mixed to positive because of some of these negative divergences that we're seeing. Again, those could all be dealt with if we continue to go up, but while they're here, we have to at least respect them and be aware of them. All right, we didn't have any economic reports, so there's no charts to show you there. Here's some Isabel Net block charts from Real Investment Advice. This shows trailing earnings. That's the red line here at 24.84. We still use that 10, 15, 20 scale, and that's well above the dashed line here, which is the average trailing PE ratio. And then looking forward, that's the black line. This is the forward PE ratio, which should be, I don't know, 15.2. I think they have that as. And we're at 22.9. But this is not telling us anything we didn't already know. The market is overvalued, whether you look backwards or even if you look forward. And probability of a U.S. recession, it was priced on August 1st across different markets here. Right now, the S&P is thinking, and I don't know how they calculate this, how they come up with this magic idea that it's 8%, think that according to how the S&P is trading right now, as of August 1st, that we're going to go into a recession. And it's still pretty low, whether you go across different forms of bonds. Where we're seeing it a little more prevalent is in the 5-year yield. And that's up to 60%. And also the small caps, because they've been underperforming. I guess they're figuring, because they like a lower interest rate environment since they have to borrow so much, and higher interest rates can really bite into their earnings. So we're seeing a little bit more of a threat here by looking at these two measures. And stocks are having a volatile second quarter earnings season. This is what happens when the stock, after they come out with their report, what happens one day later, and they've been dropping on an average of 7.4% if they miss on not only their earnings, but their guidance looking forward. And this also shows that for the most part, they've been kind of performing when they miss their expectations, but they still hold up fairly well when they beat not only their estimates, but also give more of a positive outlook going forward. And now this is before Friday's session. The Bloomberg came out and said the rally's taking a break. Okay, well, it didn't take a break on Friday, but it didn't set a new all-time high. Country composition of the MSCI World Index here, and still 65% of that is accounted in for the U.S. And then this is a little different way of looking at the LEI, the Leading Economic Index. It's put out by Carson. We get some seasonality charts from them. It says our Carson proprietary LEI has correctly said for years there wouldn't be a recession, even as all the other LEIs did. Now, I only know the official one. There are proprietary ones that come out. It still says no recession and could be trying to turn higher right here. So this line's starting to go back up. So this chart is saying we're not necessarily going to go into a recession, and that's what the market is still leaning towards. Then I'll go over this again when I do the weekly video. This is from FactSet. It says the number of companies signing recession calls, it's collapsed from 124 in the first quarter to just 16. So you have fewer companies coming out when they do their conference calls after their earnings are released that are actually mentioning recession in those calls. And then global bulls, the proportion of countries worldwide in official bull markets. Okay, this is going up. It's up 20%, and it reached 65% going back to 2021. Think about that. Okay, we will. With all the noise and chaos and BS, 2/3 of the countries are starting new bull markets. And you're bearish? Okay. Yeah, well, there's people that are always bearish, no matter what happens. The next crash is right around the corner. They're perma bears, and that's not necessarily being reflected in what we see in this chart. And then return divergence. While the S&P 500 went in 1%, it's less than that now of a record high. The median stock is 12% below its 52-week high. These are companies that are in AI, and we see all this capital investment going into AI companies. And yeah, they're doing quite well. They may not necessarily outperform with one of the ETFs that we look at. There's a robotics and AI ETF that consistently has been underperforming the tech sector. But then there's another ETF that we follow that's really been holding up quite well, where the rest of the stocks, they're not performing as good. Mastering the stock market is challenging and can take decades to achieve. Most beginner traders and investors feel overwhelmed and often fail. Stay ahead with the SPX investing program. Members gain access to the full program. Other options include immediate access to videos as they become available. Alternatively, the daily and weekly newsletters may be helpful. Click on the link below to find out what's best for you. All right, here's the chart. So we went higher at the open and we got right back up to Thursday's high, and it looked like, okay, are we going to top out here? There was a little bit of a pullback, but then we saw a break above R1. Now R1 became support. We held above that level and came down a little bit going into the close, but then bounced up off of that. So we were able to close above R1. And a little bit of more of an uptick after the market closed in Friday's session for the weekend. Still looking good here. The blue line is above the red line. They're both going up. They both can go up when we look at the intraday growth to value charts. And not a real good day for growth here, though, for the S&P. We were pretty much flat. Now, the bigger picture is going back to the beginning of July, this is still going up. But at least in Friday's session, it did underperform. And growth was up less for the large caps, or value was up more. It was down for the mid caps, and it was up, but up less for the small caps. So the mega caps did well, but you take growth together, and it didn't have a great day on Friday. So we're coming down a little bit after continuing to go sideways with our small cap growth to value ratio. Also falling down, but still looking positive overall with mid cap growth to value. And we did decline with S&P growth to value, but still in an uptrend. This one is a little better now. These are a couple of ETFs. They have different stocks that make them up, but we do a ratio between the two. This one actually went up and is now setting a new all-time high. And Discretionary didn't have a very good day on a ratio basis when compared to staples. It actually declined, but it's still in a longer-term uptrend here. And we're trying to turn up with ADX, but we're still below the moving average in the short term with the green line. Even though it came down a little bit, the red line also declined. And so the green line's above the red line, so the short term is still positive. We're also still positive in the intermediate term, even though this is a weakening trend below the moving average. And we did see a drop off in volume here. You see the red histogram below the average level here for the S&P. So that, as I pointed out earlier, something just to be aware of, a little bit of a concern there when we go up on a decrease in volume. We are declining with the VIX on a closing basis. We're also below the moving averages and declining with the bar chart. And this has been updated now where we saw the move up here a few days ago with the VIX. And this is what we're watching for seasonally, August, September, even into October, possibly a little bit into November. This is when we typically see the VIX going up, and that means that stocks are going down. We're below the moving average with the VIX of the VIX with the bar chart and the line chart. And we're rolling over a little bit here. The MACD still has us in an uptrend, but the VIX has been coming down. This got kicked into an uptrend when we had that big down day a week ago, Friday, and we've been coming down with the VIX ever since then. And we went up a little bit here with this fear gauge, and we went down with this other fear gauge. So no real confirmation there. We did increase. This could be some pre-weekend hedging going on. So the daily chart went up, but we're still going down with the 5-day chart, and we're starting to roll over now with the 10-day chart. When the equity put call ratio goes down, that's taken as more positive. And this improved a little bit, but the high beta, the low beta, it's really been underperforming lately. Now it ticked up a bit. This is mainly due to the mega caps doing well, but we want to see this ratio really going up when the market is more positive. The fact that it's been coming down, that's one of the negative divergences that we've been seeing, but this is still looking good. We do a ratio between value, which is defensive, and tech, which is growth. And this ratio continues to decline. It declined on Friday. That's positive for the market. And after getting a very high reading before a week ago Friday's decline, the volatility risk premium is continuing to come down, but we're not quite back down into the band yet. So didn't see much of a change here, but a little bit of improvement with the advanced decline line based on price and volume. We're still below zero with the advanced decline oscillator. It's continuing to decline on an up day. That's one of the negative divergences there. We saw an improvement with the short-term advanced decline ratio. It came back above zero, so it's positive again, and the intermediate term also turned up slightly. But we're still trailing off here. We're seeing a decrease in the new highs, a little bit of an expansion of the new lows, but that's causing the 5-day chart and the 10-day chart to go down. We're back to positive with all three of our smart money indicators. We're back above the moving average here with the main indicator. When it's above the moving average, that's positive. And we're also turning back up with the shorter term indicator, the boom indicator. It's also continuing to go back up. So this is positive, but we're still, we're not positive with all three. We're continuing to be negative here with the Chaikin money flow, but we are positive and crossing above the midpoint with the Chaikin oscillator. So two of our three smart money indicators are positive, with the Chaikin money flow here still being negative. And we're still positive with the vortex, a bit of a bounce up with the green line, but we also saw the red line going up a little bit as well. And we're still seeing a little bit of a disconnect here when we compare the S&P to the NYSE advanced decline line. This is still a pretty healthy looking pattern. Higher highs, higher lows ever since we had that big down day on Friday. And we're showing some improvement here, but we're actually seeing this closing down a little bit. So a little bit of a negative divergence there. But the advanced decline lines, NYSE common stocks still above the moving average, as is the S&P and mid caps. We're coming just a little bit under the moving average with the small caps. They are underperforming. And we did improve with those stocks in the S&P above their 20-period moving average, but we're still below 50. So that's still negative. And we're bouncing up, showing some improvement with the 50-period moving average study, 100-period moving average study, and 200-period moving average study. So in the short term, this is still looking pretty healthy here as far as the advance that we're seeing. And we're still in an uptrend, but we did drop down to below average with volume. A little bit of an improvement with the 20, 50, and even the 200 turned up slightly. When we look at the moving averages just on the S&P, we're crossing above the midpoint, so that's turning more positive with the Stochk RSI. But if we were seeing a lot of conviction, we would see this all the way at the top. Where the Williams percent are, it's just starting to go into extreme positive territory. And we're above the midpoint and going up with the CCI 14 and the CCI 20, but neither of those are looking extreme right now. We are starting to get extreme with the stochastic short term. That's above the moving average and getting above the green line. We're turning back up with the intermediate short term. We're still declining, but trying to improve with the long short term stochastic chart. And a little bit above the midpoint now with the force index. So that's turning a bit more positive. And we're improving here with the short-term trend. We're coming back up here, and the blue line and the green line are starting to turn back up. And we're above the 20-period simple and exponential moving averages. So that's why we're positive in the short term. And we're coming up into the +2 channel with the standard deviations chart. So that's showing some improvement there. We actually turned up a little bit. We're still seeing this longer term negative divergence between the balance of power when it was going down as the S&P was going up. But it did improve a bit on Friday. And we're positive with the darker blue bars with the go, no go. We're crossing above the midpoint with the highest high, lowest low value chart. Still getting long here. We're at day 69 that we've been in an uptrend according to the Landry Light system. And we're also continuing to be in an uptrend with the proper order. We're still seeing this negative divergence with the TTM squeeze. We've been going up. Well, first we were going up and this was going down. Now we've been going up recently and the TTM squeeze is still going down. So that's another negative divergence. Just slightly above zero here with the ease of movement. We're actually declining a little bit with the oscillator, the Arun, and we're coming down with the buyers and a little bit of a pickup here with the sellers. So that's why this is declining, but it's still above zero, so it's positive. And we saw a little bit more of an improvement with the S&P McClellan oscillator, but it's still below zero. So we're still going down with the summation index based on price and volume. Also a little bit of a tick up with the NYSE McClellan oscillator, but it's also still below zero. So declining with the summation index based on price and volume for the NYSE. This has been positive pretty much throughout the week. The swing and trading oscillators continuing to advance based on price and volume, and both have now crossed back above zero. That's even more positive. Usually we just look at the direction of these lines. Still looking more negative with the momentum. We're not extreme with the PMO, and we're below the moving average. And this is actually treated as negative since it's declining. We're still declining when we break it out based on price and volume. A little bit of an improvement, but still below 50 with the PMOs that are rising. Still below 50 and kind of flattening out to declining with the buy signals. And we're continuing to decline here with the PMOs that are above zero. This is also part of the negative divergences that we're seeing in the charts. But we're positive with the Elder's Impulse system with the green bar for the S&P, and we're still negative with the parabolic SAR. We haven't seen enough of a breakout yet to change it so the dot is underneath this, at least yet. We are improving with the slope oscillator, but we're still below the moving average. We're turning up a little bit, but below the moving average with the MACD. So our short, intermediate, and long-term oscillators continue to be negative, and the Copic curve is still negative as well. Starting to go up into this darker green area here with the Sean trend meter. That's why it's considered to be extreme positive. When it really gets extreme is when it goes up into this darker green area on top. We're still above 50 with the money flow. We did advance, but we're below 50 with the ultimate oscillator. Still above the advancing moving average with on-balance volume. And intermediate and short term, we're still above 50 and advancing here with the RSI intermediate and short term indicators. The bow tie, we're back above the green line here, and so that's improving a little bit. It's slowing down. It's still going sideways to slightly down, but we have the 20 period and the 30 period still continuing to go up. And here's the intermediate term trend. Based on 50 periods, we're coming back up to the blue line. We're seeing a little bit of a slowdown here with the intermediate term trend. Now, if we can get above these lines, of course, that would help things. But if we stay down below this, eventually these lines might roll over. But for right now, they're still going up. And we're above all the plotted moving averages with all the moving averages continuing to advance. We're not far away from the 20-period moving average, but we're back to being extreme far away from the 50-period moving average. And we still declined. Now, the bullish percent index went up a little bit here, but we're still below the moving average when we look at the bullish percent index. A little bit of a tick down with the NYSE bullish percent index and continuing to decline with the NASDAQ 100 bullish percent index. So it's setting an all-time high, and this is still going down. Okay, that's part of the negative divergences that are still apparent. Support and resistance, we're now getting above this little mini rainbow here where we'd spent some time inside of it. We've finally been able to climb back above it. And now we finished out the week. We were up 2.43% for the week. We're still below this R1 pivot point at about the 64-68 level. So we want to watch that. If we start breaking out to the upside, is this going to provide longer overhead resistance? And we're back to looking more positive with the trend. The Heiken Ashi has open candles. We're pointing up in black with the Kagi chart. The Renko chart, which was negative after Thursday, it's now switched back to positive. And the three-line break, which was negative also after Thursday, it's starting to look more positive as well. Long term, still looking good with our 150 and 200 period moving averages. And we're still negative in the short term with the mid caps, but all the other indexes are positive on all the time frames. And we're still negative in the short term with commodities. The dollar's still negative on all time frames. Bonds are positive in the short and intermediate term based on price. And we saw the two big defensive areas, utilities and real estate, they were down. But we had tech. That was the big area that led. And that's why we went up with the indexes and why the NASDAQ and NASDAQ 100 set new all-time highs, where communication was also up, but not all that much. And discretionary was up just a little bit. So we had a dollar having a MACD crossover again. That's negative. And the Dow got back above 44,000 with the NASDAQ. They don't have it on here, but the NASDAQ 100 also set a new all-time high. And seeing a little bit more of a divergence here. We've been going up with the S&P weighted index where we ticked up a little bit here, but it's getting a little far away. Usually these tend to stick together when they're more in tandem with each other. And we've gone from negative back to neutral with the diamonds. And we were up almost 0.5%. The Dow is still having a hard time getting above this pivot point. And the NASDAQ setting a new all-time high here and in an uptrend. And positive with the Elder's Impulse system. And setting a new all-time high with the NASDAQ 100. It was up 0.95%. Also positive with the Elder's Impulse system. The momentum for the NASDAQ 100 is improving, but it's still below its moving average. So that's still treated as negative. And as the NASDAQ 100 was going up, we have been continuing to see the PPO continue to go down. And still getting a little bit above this longer term trend line on the weekly chart for the NASDAQ 100. And still below the 200-day moving average with the S&P 600, still above the 50-period moving average. We're up 0.25%. Still in an uptrend with the Russell 2000 small caps, and they were up 0.22%. Neutral with the Elder's Impulse system for the small caps, and just chopping sideways, still generating a recent golden cross with the mid caps, but they were virtually unchanged. And negative to neutral with the mid caps with the Elder's Impulse system, up 0.67% with the Wilshire 5000 and looking good, but not setting a new all-time high. Also up 0.64% with the total US stock ETF, but still in an uptrend, but not at an all-time high. Financial sector was up 0.93%, coming back up to its 50-day moving average. And that's looking good all by itself. But when you compare it on a ratio basis with the S&P, we have a recent death cross here, and the financials have been underperforming the S&P going back to the earlier part of May. And the FANG index, it was up 1.2%. That is an all-time closing high with the FANG index. Those are the big stocks. Apple just continues to go up. It had a really good week. It was up another 4.24%. Amazon was actually down a little bit, but still above its 50-day moving average. Microsoft was up 0.23%, also in an uptrend. Google is in an uptrend, up 2.49%. Meta was up almost 1% and above its 50-day moving average and also in an uptrend. Tesla was up 2.29%, but it's still just been bouncing above and below its moving averages. And Nvidia was up over 1% here and in an uptrend. Netflix up 2.65%. It still has to get back to its 50-day moving average, but we've been seeing a pretty significant shorter term decline here. If this can get back up above the 50-day moving average, that would really help Netflix look a little bit better. And the Dow Jones Semiconductor Index setting a new all-time high here, and not quite back to an all-time high with the SMH Semiconductor ETF, and not quite here on a closing basis with the Rainbow. We have a little bit further to go up for this to set a new all-time high. And I usually show this in the weekend videos, the semiconductors, which are growth to Dow ratio, which is value. This ratio has been improving, and it was up in Friday's session. And a little bit of an improvement here. Now, we were concerned because we were seeing the semis really underperforming the tech sector, and that's a concern to us. Now, the market can still go up and do that. It did that just about a year ago. It was August when we saw this ratio really coming down, but the S&P just kept setting new all-time highs. Well, it was coming down, but it came up. It was down a little bit on Friday, but it has been improving with this overall ratio. And a little bit of a tapering off here when we look at the US to world stocks here in the short term, still drifting lower with the long term correlation. Oil was down, getting deeper into the mid 60s at 63 now. And the dollar ended up being down, but it did get kind of almost back up to its 50-day moving average. And coming in at 1.76% with the daily revision of the Truflation reading. And we are coming up with the 10-year yield, but we're still below this red line, which is the 4.5% yield level. And dropping off a little bit here with the 10-year based on price. Improving nicely with the Qs to S&P ratio here. That's going up and it's above an advancing moving average. Discretionary to S&P, it's below the moving average again, but we're looking fairly good when we compare large cap growth to large cap value. So we're above the moving average and advancing with the large caps. We dropped a little bit below the moving average with the mid caps and a little bit further below the moving average with the small caps. So this was mainly the large caps and the mega caps that really helped in Friday's session. With each video and course, members learn to implement the consensus approach, a unique analytical method. Unlike relying on a few indicators that eventually fail, this approach overcomes analysis paralysis by using the weight of the evidence to draw conclusions. Developed over decades across all market conditions, explore the SPX investing program and start with a 30-day free trial. So the outlook, we're still dealing with earnings season. Not as powerful as it was, but there's still going to be some reports that come out. We are positive on all three time frames, but we're seeing it's not so much weakness here. It's more these negative divergences, especially when we're seeing a lot of them at the same time. We just want to be aware of those. Now, they can get taken care of if we have some good, solid, broad market upward move. But in the meantime, we have to just pay attention to them and be aware of them. We don't have any economic reports, again, coming out on Monday, so it's pretty light in that arena. And then seeing if anything comes out with the talks between Russia and the U.S., maybe including Ukraine, any new trade deals, any tariff announcements, things like that, that could come out, and then anything geopolitical that could develop over the weekend. Here is the economic calendar for the upcoming week. Now we're going to get CPI, which is, in my opinion, the second most important economic report of the month. That's going to come out on Tuesday. Then Wednesday is going to be pretty light. Then we're going to get initial claims and continuing claims. That's become rather important. And PPI on Thursday. And we're going to get retail sales on Friday, industrial production and capacity utilization, and consumer sentiment. So we've got a pretty heavy week coming up with economic reports. Here's also a look at the calendar, but there's nothing for Monday. The earliest big thing is coming on Tuesday. Seasonality, we're negative for August 11th with the Dow, where we're neutral to negative with the S&P and NASDAQ. Now, we are coming into options expiration week, and we've been up 52% of the time, down 48%, so it's almost a coin toss there. Not much of an edge, a little bit of an edge, looking over more on the positive side of things. And then this is where we see during post-election years, the green dashed line, we see some tendency to have weak seasonality. That really hasn't developed yet. Are we going to buck that trend and actually go the other way this time? Maybe, but we don't know that. We've got some reports coming out, anything geopolitical or having to do with the trade deals, that can come out and be positive or negative, and it could end up putting some pressure on the market. And then here, post-election years for August, we have yet to be positive. Is this going to be the exception? We still got a long ways to go to get through August. This also shows how the post-election year for August is negative, going back to 1950. Also negative seasonality here, but we're just not really seeing that yet develop. So we have the S&P and NYSE McClellan oscillators and summation indexes. They are still negative. Parabolic SAR is negative, and the 20-period moving average. Even though it improved, it's still below 50. And the bullish percent index still is declining. With the NASDAQ 100, it's setting an all-time high and it's declining, not what you would usually see. And the S&P 500, it bounced with the bullish percent index, but it's not above its moving average yet. And the momentum oscillators continue to be negative. The ultimate oscillator is negative, and the momentum oscillator is improving for the NASDAQ 100, but it hasn't crossed above its moving average. And then we're getting really close to a cross here with the long-term special K. I'll show that over the weekend. If we do see a cross, I'll bring it up a few times in the daily video. And then the Zohorchak method. We're still seeing a sell signal there, but it is improving. It came off of a -10. It's now back up to a -6. So the positive side, I had all three of the smart money indicators here. The chicken money flow is still negative, but the accumulation distribution and chicken oscillator are positive. And we're still looking good with our longer term growth to value and discretionary to staples ratios. Swell and trading oscillator continues to show strength. And the bullish percent index, it's still above 50. That's why it's on the positive side for the NYSE. The money flow is positive and the ease of movement just barely above that zero level. And the vortex continues to be positive. And the financial sector, again, when you look at it by itself, but when you compare it to the S&P, that's a warning sign that we've been watching for a while. Here are the pivot points for Monday's session. They've already been updated on the YouTube community tab. They're also included on the website as well. All right, so our conclusion, no changes here. Positive on all three time frames. We're above the 20-period simple moving average. We're not seeing an awful lot of conviction, but now we're leaning a little bit more positive because we see the Williams percent R and the short-term stochastics starting to show more short-term momentum. And again, we're seeing some weakness here in the intermediate term, but so far they're just propping up as negative divergences. We're still looking good with the long term. Thank you. I hope you found this helpful. I hope you have a really good weekend, and I will talk to you in the next video.